Just want to welcome, Oliver. Welcome back, bro. I Yeah, I don't seem to hear your audio. Just want to, bro. Can you hear me?
I can hear you.
Right, beautiful. I can hear you now as well. Right, so today we won't be going with entries. We'll just be focusing on education that we talked about yesterday, risk
Mhm,
management, and also the identifying the proper node trading zone for you to execute a potential entry. Right.
mhm.
So have your notebook, pen, paper, whatever it is with you, and we'll just go through quickly because 1 o'clock we might have an entry, so we'll see how it goes, right? So first thing first, we're gonna go with the new SOP, right? The risk management. So let me share the SOP back in the group, in the group. Yeah, I think half of it you understand, but then you need to properly implement when it comes to the live trades. All right, so step number one. Example, if you have a no trading zone over here, right? By the way, can you see my screen, bro? Don't don't think I'm sharing my screen.
No, can't see anything yet.
Yeah, let me share my screen. All right, beautiful. Um, how about now? Really? All right, beautiful. Let me just double check the stream on YouTube for real life. Right, so if we have a no trading zone, I'm gonna go with the example of type A, type B, type C, and also type D. Every entry that we have and every risk management that we apply for every entries that we have, right? So I'm going to start off with type A first, plan A buys, just as an example. So criteria number one, right? In order for us to execute a trade, we need a candle to close above resistance, and the body has to close above as well. That is very, very important. Here I'm talking about type A entries. So if you don't have a body closing above resistance, there is no confirmation for us to go in for a buy, right? We need the body to close above either a top wick or even a bottom wick, right? So in this scenario here, this is our current resistance, and I need to see a candle closing with a body closure above resistance and leaving behind a long top wick to the upside. Not a very long one, just maybe quarter of the range, right? Something like this. So your overall range would be up till this resistance. So maybe 30%, 10, 15% of the range. You need to have a top wick above. And if you don't have a top wick, there is no trade. As simple as that. So that is your confirmation candle. That is number one. And number two, once you execute a trade, give me a second here. Doing this. Right. So once you execute a trade, we clearly know that we need to wait for a bottom wick to be formed. And this current the execution candle, the bottom wick has to tap the previous resistance, which is the previous high that we marked, the previous resistance, right? The bottom wick needs to tap this area and then reject and break the previous candle high in order for us to go in for a buy. If it doesn't do that, there's two ways of executing a trade without a resistance, because sometimes we understand that price is, you may have multiple top wicks, multiple bottom wicks within an area. So example, if there is one top wick here, and what if price taps this top wick and then goes back to the upside? You may ask that question, right? So for us to counter that problem is we have a rule where we go with 30% or 50% of the previous candle. So what I mean by that is this is your previous candle, right? Let me change the color for that. Great, right. So this is your previous candle. 30% of the candle would be within the top wick. So as long as your price or your candle creates a bottom wick within this area and then flips back to the upside, that is fine. That is number one. And number two is if we go down to 50% of the previous candle and then flip back to the upside, that is still a valid entry. It doesn't matter when you break the high, it's as long as we have a bottom wick and then we break the high, right? And a minimum criteria of 1 minute. I like to let the candle to play out for the first 1 minute, because sometimes if you go in too early, what will happen is price just push up and then come back to the downside to create that proper bottom wick and then reflip to the outside. So that would be a problem. So always non-nego, you need to let 1 minute pass by. Only then we go in for the trade. And now let's talk about risk management. So in the scenario of you executing a buy and the trade going in your favor, right? We created a proper bottom wick and now the price going in your favor, up maybe around 100 pips. Yeah, this is around 50 pips. So if your stop loss is 50 pips, just as an example, let's go with that first. Color the candle. Give me a second here. So yeah, we went into a trade. Stop loss is around 45.5 pips plus minus. No, no, no. I'm just showing you an example. We're going with education, bro. Right. So as an example, we took a buy over here. We have a 45.5 pip stop loss. And your TP1 is where you're going to secure 90%, 80 to 90%. It's up to you. Right? TP1. Let me put that on the screen as well. 80 to, it's up to you. You want to go with 80%, 90%. Totally up to you. You can do whichever you want. But I like to just go out with 90% and let my balance 10% to go. Right? So that is where I'm going to secure 90%. And my TP3 is where I'm going to let my final take profit to go, or even my runner to go. So if I close 90% at TP1, I still have 0.10% of a runner, and that will always be at TP3. So your final TP will always be at TP3, right? So you need to understand when to secure and when to go break even as well. So the moment you secure 90% of your trade or 80% of your trade, you need to go break even, meaning your stop loss has to be slightly above the entry point. Maybe 1, 2, 3, or even 5 pips. It doesn't really matter, right? Not too high. It might get stopped out and then continue. It will be maybe around, ideally around 1 to 5 pips above entry point. So that is where your break even is going to sit at. So this is if the price went in your favor. So now what about if price comes back to your entry point? So we have the calculation of 30%, right? So example over here, we have a 45 pip range. So 50% of it will be around 25, 20, or even 15 pips somewhere over there, right? So quarter of that is going to be your 30% range. So if price pushes up 30% and then it comes back to your entry point, even before moving down into drawdown, even before losing $10, $15, or even $30, you have to get out of the trade, meaning close partials, right? So I like to close around 50 to 80% of my partials. Depends on the trade. So if we made a very strong push and then immediately we come back to the downside, I'm gonna get out 80% to 90%. But if you're pushing slowly and then we're coming back to the downside, then maybe I would give it a second chance. So I'm gonna close 50% first. Clear on that, everyone? Oliver, clear? Right. So let me repeat myself. If price pushes very strong and immediately comes back to entry point, get out 80 to 90%. Yeah. And if it's going, in a linear movement, slowly pushing up and then it comes back down, maybe get out 50% because we might add our position. So the difference is liquidity grab, right? Candles that are making or doing liquidity grabs, they tend to move very fast. They shoot up and then immediately they will melt back to the downside. That is why I like to get up immediately. And the moment you secure 80 to 90% on a very fast candle, your stop loss goes to 50% immediately as well. So number one, get out 80 to 90, and then your stop loss goes to 50%, and then we'll let the trade go. If it goes back to your 50% of your stop loss, so if your stop loss is maybe 40 pips, you bring it to 20 pips, right? So at that point, even if you hit your stop loss, you only lose around maybe 0.10 or 0.12% because you've already closed 90% and you only have 0.10% running. So this is for the very quick entries, very quick candles. But what about the normal candles, the one that is moving in a linear motion, right? So for that, it's exactly the same. The only difference is I would be out 50%, and the moment the candle starts to break below its own low, I will just get out of the trade. Right? Not gonna wait until it taps 50% or your stop loss. I'm just gonna get out. The moment it flips bearish, I'm gonna be out of the trade. So you need to be very, very quick and very precise with what you do as well. So the first 5 minutes of your entry and your management is very important. That is when you need to be prepared to go break even, secure, or get out of the trade, because that's the most crucial part that you need to pay very, very close attention to, and be efficient with your movement of your stop loss, TP, and all that, right? So your final TP, the moment you go in for a trade, will always be at TP3. Just let it be there. Because the moment you go in for a trade, you already know how much you're gonna risk. Example, $100, $200, $300. So the moment you see your profits, just secure. Simple as that. Doesn't have to be very precise with your secure or your 90% securing thing, but yeah, you can even secure at, maybe it doesn't have to be 100% you get 1 to 1. Sometimes even at 90% or 80% of your range, you can start securing. It's up to you. Clear, bro? Right. So that is for risk management when it comes to entries, which is in profits, and then we have not gone break even and so on. So as you know, when price goes to 1 to 1, we immediately have to go break even. And whenever you take a trade, the first thing you have to do is put in your stop loss and TP. That is very, very important. And then second, we go in with the panel. You have to open up your panel and be ready to manage your trade. And number three, once you have managed your trade, immediately you have to reopen your panel again, because you're gonna have a runner going, right? The balance of your position. So you need to be ready to get out of that entry as well. And the most important thing is, the moment you push, the moment it comes back to the entry point, never hesitate. Don't think that, oh, okay, price maybe it might fluctuate and then go back to the upside or whatever it is, right? Straight away get up. 80%, 90%, 50%, whatever it is, have to be up, because that is your rule, that is your SOP. Doing this will not only give you better trades, it will also save you from losing a lot. You're not going to lose 1% if you do that. So we are done with risk management. Any further questions, anyone? Right, beautiful. So now we're going to move into no trading zones, which is very, very important. So especially Oliver, I tend to see you identifying zones. Yeah, your zones are correct, 100%. It's fine, but the placement of the resistance and the support is wrong, right? So as an example, you may take this as your no trading zone over here, right? But then you this is on the 15. This is based 100% on the 15. The thing that I see you missing out on is you are not shifting through your higher time frames, like your hourly, your 30, and your hour 4, and so on, right? So that this if you do this, you will understand that if your 15 is clean but your hourly is messy, the trade is not going to work out, because now your hourly has to struggle through the resistance or even the support, right? It doesn't make sense for us to take a trade within a messy range. So let's go with the quick analysis first, and then we identify our no trading zone, right? So here daily, we can clearly see that the previous candle closed bearish. Today's candle went all the way to the upside, created a top wick. That means we are rejecting the previous support, which in turn became our new resistance. So lower lows and lower highs. Price did break below the previous candle low, which means that might be a continuation back towards the nearest support, which we have on the daily structure, right? We have a bottom wick over there. So that is our nearest support. So my plan A for the daily is going to be plan A sells and plan B buys. Moving down to the hour 4 time frame, we don't have much structure, but then every candle that we see is printing bearish, right? It has been printing bearish and it's also printing bearish at the moment. Previous candle closed as a doji candle. It means indecision, but we did fill in the wick of the previous candle low, which means that in the lower time frame we did print lower lows and lower high structure. So now, in order for us to continue back to the downside, we need to see a break of the previous candle low, which means I want to see the hour fall and the hourly closing below the support, because we have another 59 minutes and 40 seconds before the hour fall candle closes. In the last 1 hour, anything can happen. This candle might even just flip back to the upside as well. We never know, right? But we need to stick with our bias, which is daily bearish. And if you look at the current hour fall, we are still bearish as well. The only problem is that we don't have a proper structure. It's just melting back to the downside. And moving down to the hourly time frame. The hourly, we can clearly see that prior to this, we did push through, right? We went down. So it means that we are in a push phase, or we were in a push phase. So if price was in a push phase, in order for us to continue back to the downside, we do need a pullback first. So lower low, lower high, and then we continue back to the downside. That is the structure of lower lows and lower highs. So now we need to correlate our daily with the hour fall and also the 30. So looking at the daily time frame, it doesn't really need a top wick because we did print the top wick earlier this morning, and also during the current session, right? We have a substantial, a good enough top wick. Why? It's because we did pass through the 30% range of the previous candle, and then we broke the low. So it is a valid top wick, or even a valid rejection for us to continue back to the downside. Moving down back to the hourly time frame, as I mentioned, in order for us to continue back to the downside, we do need a pullback. So when will a pullback form? It will either be during pre-London or sometimes even during London Open. Our job is to identify the range and also the direction where price needs to go. So we are basically pre-planning our trade. So looking at the current structure, we know that price has pushed down. So in order for us to continue back to the downside, I need to see a pullback. So where will the pullback be? That's the question. 99% of the time, pullbacks will always be on the previous support, right? From the push, we will have a pullback. So that's your push and that is your pullback. So now my job is to wait for price to come back to a previous support, form a new resistance, and then we go back to the downside. So ideally, I would like to see a new no trading zone being formed at this previous support, and then we go back to the downside. But the problem with that is that will take a long time, and your trading session is during pre-London and also London Open. So what if this setup will work out during New York session? So now you have an idea of what price might do for London. So if we break above this current resistance, there is a probability for us to go back to the upside, fill in this range, form a new structure for London, and then later on for New York or even pre-New York, go back to the downside. So now we are pre-planning our trade idea for London and also for New York. We have an estimation of where price might go and might reject. Clear so far? Right, beautiful. So now we have a range of resistance breakout and also an area where price might tap and reject. So this is your breakout of a high, and that is where you're going to take a buy. We have a range of 100 pips, which is more than enough. Even if you get quarter of it, you're up around 60, 30, 40 pips, more than enough, right? And as for your sells, we can clearly see that the current candle is bullish and we don't have a proper bottom wick. So it means that if we break our own low, there is a possibility for us to fill in back to the downside, fill in the range back to the downside, where we have about 54.3 pips. But the problem with that is we do have a much cleaner range below that. If you break below the hourly, now you have a better range below this, which is around 396 pips. So which is better? That's the question you have to ask yourself. Am I going to go with a 50 pip range or a 396 pip range? Which is better? Correct. So now you have a better no trading zone, whereby you now, if you go down to your 15, no matter what happens, you're not going to take any sells over here within this range. You're just going to wait for a support to be taken out and then we go in for the trade. So now let's build our plan A, plan B, plan C, and also plan D. Later I'll go back to the entry points and risk management on every setups that we have. I just want to go through the, identify your no trading zone first. Right, so now you can clearly see that the 15-minute candle is breaking through a resistance, and we also got our range from the hourly time frame. Right, that is our TP range from the hourly time frame. I'm just going to stick with that. I'm not going to readjust because we understand that there is a probability or possibility for price to reject this area and then go back to the downside. So now our plan A is sells, plan B is buys. So if I'm going to take a buy, I will only be risking half of my risk. So if I'm going to put in $100 today for my buys, I'm going to use $50, half of my risk, because it's a riskier setup, and also we are going against the trend. Understand? So now looking at the size of the candle, the size of the candle is very, very, very important. So this, yes, half the risk. And for my, sorry, bro. No, the keyword here is we are going against the direction of the daily time frame, because remember your daily is bearish, and you are taking a buy. You're going against the higher time frame. There's a reason why we go with half the risk, because it's a riskier setup. Make sense? Yes. So if you do that, you're gonna go with smaller losses, and also you're gonna avoid taking unnecessary entries, impulse, and all that. So let's talk about type A buys. Type A buys. That's the most common entry that we get, right? The type A buys, there's two ways of identifying a type A entry. Number one is this candle here, right? This is a huge candle pushing straight from a support. So which means we have a lot of volume and we have a lot of liquidity within that single candle. So does it make sense for the next candle to just fly up straight away after creating a bottom wick? For the next candle. What do you think? Does it make sense for the next candle to just fly up with providing that this current candle close bullish above? Does it make sense for price to do this? Right. Why? It's because we used up a lot of liquidity on this current candle, or even volume. For me, if you ask me, it doesn't make sense at all from the next candle. Even if it goes up, for me, it doesn't make sense for it to just push up straight away. And also, we are going with plan B here, which is against the daily direction. So how do we solve this issue? It's very simple. No, no, no. Because remember, you're looking for a plan B buy here. Your price, your cat. Yes, so a type C. So in order for you to execute the type C and for it to work out, your first candle that is breaking the resistance, right? This candle, it needs to close above the body. The body of the candle needs to close above the resistance. That is very, very important. And number two, I need to see the second bearish candle closing bearish, respecting that resistance as well. It needs to respect, very, very important. So if you're you mean below, breaks below. No, we are not bothered about the resistance. We are just bothered about the body, the lower part of the candle, right? So I want to see the candle's body, the current support body, right, to close respecting this area. Let me change the color of the candle. Right? This is a bearish candle. I don't want to see this candle's body closing back inside the range. I want to see it respecting, and also, yep, I want to see it doing this. Now, if it does this, it means that on the lower time frame, we have printed a higher high and a higher low structure, right? But yeah, bottom wick doesn't matter. I just want the body to close above the resistance. If you close back inside, now that is a no go, right? It's invalid. It's not a type C buy. It's going to be a type B sell, because that is a fake up. So you need to pay very, very close attention to the second candle's body. where is it closing? Very, very important. Because if you close inside and then you take a buy, there's a very high chance for us to go up, reject this area, and then flip back to the downside. And that is exactly what happened over here as well. Right? It will just go back in the opposite direction. So that is a possibility. So that's why we need to look at how the body of the candle closes. And number two, in order for us to execute a type C buy, your candle, the first 1 minute of your first new candle, it needs to push down first. That is compulsory. You need to watch where the candle goes first. Because the idea is if you push down first and then we reject, it means that we are respecting this resistance. But if the candle does the opposite, where it goes up first and then breaks its own low, it means that we are respecting this resistance. So now your buys is not going to work out. You need to pay very, very close attention to how the candle reacts on the first 1 minute. That is why we always let 1 minute to pass by first. So let me repeat myself. If the candle pushes down first and then breaks the high, that is a valid type C buy. But if it push up first and then breaks the low, that is a type B sell. Impulse type B sell. Yeah. Notice where the top wicks are sitting at. So in order for you to take a buy, your stop wicks needs to push to the downside, meaning reject the downside. This is a valid entry. So the moment you go in for the trade, as you know, if you're sorry, yeah, either way you still have the risk because you're going with a buy. If you're taking a sell, then you can go with 1%. Whatever it is, if you're going with the impulse textbook entries, if you're going against the buyers, you need to go with half the risk because you don't have daily confirmation. Yeah, if you're going with the direction, then yes, 100% you can go with the full 1%, 2%, whatever it is. Yeah. So now we have our plan B. We got our plan A, which is the sells. We want to look for a closure below and then a sell back to the downside, type A sells. Our plan B, we're going to be looking for a buy. So for me to execute a buy, a type A is not ideal because the size of the candle is too big. But now it'll be a different story if you have. So I'm moving on to another type of type A entry, right? The first one we are done with the size of the candle, huge type A candle. So now let's talk about candles which are pushing through and climbing up slowly, right? Let's talk about that. Yes, small candles. So I think I want to draw that because we don't have a proper structure here. Yeah, it'd be better if you. That's your resistance. This is your. Give me 2 minutes. I don't know why Jay called me. Give me. Right, we are back. So as usual, no trading zone, rejecting from a support. Let me draw the structure first, and then we go through it. So when it comes to a no trading zone, right? A perfect no trading zone. I love to see, or would like to see a consolidation first, right? A strong consolidation, meaning price is just side by side sticking in the same area, within the same range, right? And then during session, I would like to see a candle breaking out. So it won't be a strong bullish candle like this. It will be a candle which is slowly climbing up. It's like a ladder, right? You will see 3 or even sometimes 4 to 5 candles slowly climbing up, and then eventually we'll get a breakout above resistance. So this is a perfect textbook type A entry or setup. And with this type of entries, you don't really need a bearish candle to close because you can go in on the next candle creating a bottom wick and breaking the high. Immediately you can go in for a type A buy. That is a perfect type A entry. So you see the difference between the previous entry and the current entry, right? So this is an ideal situation where we'll go in for a perfect buy. Correct. Correct. So anytime that you have an overextended candle, this is what you have to do. Wait for a bearish candle to close above. Okay, so if you see a no trading zone, right? Example, in this area here, we do have a no trading zone. And that one single candle ate up the whole range. That is an overextended candle. That is how you identify your no trading zone. Clear, bro? Let, yeah, so let me look for another example. Yep, yep. Right, look at this. This is perfect. This whole range here. Our no trading zone, right? And look at the way that the candle closed. It just ate up the whole area, it engulfed the whole area, and then we closed super strong bullish. So an ideal option would be for you to wait for a bearish candle, and then we go in on the third candle, type C buy. This is a perfect. uh oh yeah. Yes, yes. It will be an impulse type C. So in order for it to be invalid, the third candle needs to break the previous candle low. Right? If your third candle breaks the previous candle low, which is below this, where's my line? Yeah, below this. Yeah, half roast. Correct, 100%. Correct, correct. So now you can see how the candle closed, right? Yes, it closed strong bullish, but it did not break above. It's an invalid entry. So what do we do with this type of structures? It's very, very simple. If you have volume, if you have a lot of volume, the next candle creates a top wick, first push up first, and then breaks the previous candle low. You can go in with an impulse type B sub. So very important, it needs to push up first, create a top wick first, and then break the previous candle low. That is an impulsive type B sub. But if the candle closes back bullish up towards the upside, so remember earlier we were discussing that if in order for us to take a buy, no matter what, we need a body closure, right? So example, if currently this current candle, at the moment this current candle closes bullish above this resistance, will you be taking a buy on the next candle? Yeah. If the current candle closed bullish with a body closure above resistance, will you be executing the trade on the next candle? Yes, correct. So now you have confirmation, and now you have to go back to your type A buys because now this is your new confirmation candle. The next candle creates a bottom wick and breaks the high, you go in for a buy. And it has to break the previous candle high, not this previous top wick, right? Previous candle high. That's when we go in for a buy. But usually what happens with this type of entries is that it tends to leave a very, very long bottom wick to the downside. From my experience, that's what I've been seeing, right? The third candle will just melt down first, leave behind a long bottom wick, and then we go in for a buy. So how do we counter this problem? It's very simple. You just place your stop loss on the body of the candle rather than the bottom wick. So it's going to be something like this. This is how your trade is going to look like. Yes. So the reason behind that is yes, the reason behind that is because look at the way that the candle are printing, right? It's just bullish. There's no bearish candle at all. So if there's no bearish candle, it means that we have not printed a structure. We have not printed a support. But we also need to understand that every candle that has a top wick and a bottom wick is also a support and a resistance as well, right? So the idea of the third candle breaking this low and then flipping back to the upside is we are basically breaking the previous support, creating a fake out, and then continuing back to the up. Make sense? So that is a liquidity grab candle. It gives you a fake direction and then it goes back in the actual direction. But very important, we need to break the previous low. If you don't do that, then ideally it's not a good entry. Right? I would like to see the breakout first, fake out, and then continue back to the up. Clear so far? Right. And if you have any confusions, everything is on YouTube. You can just rewatch later on. Right. So now let's talk about type B entries. Where do we execute type B entries? This is the mistake that you did yesterday. Right? You took a buy in the middle of nowhere. Was it you? Let me double check. Let me check. Let me check. Yeah. Yeah, you did go in with the type B, bro. Type B on the 30. Let me highlight that to you. Right. Open up your WhatsApp. Yep. So that is a type B buys. It is a type B on the 30-minute. Right. So the problem with that entry is it's actually very, very simple. And in the beginning of the course, we did go through minor highs, minor lows, major highs, and major lows, correct? The formation was perfect, right? The formation is perfect, but the area that we rejected out of is not a major low. That's the problem. So let's talk about minor highs, minor lows, major highs, and major lows as well. So let's move to the hourly time frame. Sorry, hour 4 time frame. So we got a resistance, right? We have a yeah, yeah. Can't do much. Right. So yep, yep. Right, so look at this Hour 4 candle, right? The high and low of the Hour 4 candle, right? The top wick and the bottom wick, it's your major highs and major lows. Always. Hour 4 candle. Sorry, bro? Yeah, yeah. So that is your major high and your major low. Let me write that down as well. Yeah. And this applies to all the pairs and every Hour 4 time frame, right? Major high, major low. Yes. Gosh, give me a second. Right, beautiful. Right. So that's your major high and major low. This is your 30-minute time frame. It all over there. Okay. So in order for us to execute a type B buys, right? Type B buys, type B sells, whatever it is, you need to see price rejecting these two key levels. That's very important. If price is not rejecting this area, then there won't be a trade for you. Especially on give me a second. What did it say? Right, we're back. Are we back? This one too. Guys can hear me? Alright, beautiful. So, in order for us to execute a proper textbook sell or buy as a type B entry, we need to see price rejecting an area of of major rejection, which tends to usually be at major highs and major lows. So, as an example, if price came back up for a pullback and then forms a type B sell over here, now that is a valid sell for us to execute. The reason is because, as we saw earlier on the hour 4 time frame, in order for us to continue back to the downside, the hour 4 and the hour 1 needs to come back up first and then go back to the downside. Now that will be a valid type B sell. But if you see a type B sell somewhere in the middle of nowhere, in the middle of this area over here, right? This is an invalid sell in order for you invalid sell during non-volume sessions, meaning anything before 3 o'clock, anything before 2 o'clock. With this type of entries, it rarely works out because you're not rejecting a major high or a major low, you're just rejecting a minor high and a minor low. So what's the difference between major highs and minor highs, right? Let me do that first. So as we understand, we took our major high and major lows from the hour 4 structure. Our minor highs and minor lows will be based on the 15-minute time frame or even the 30-minute time frame. Yep, either one. That will be usually your no trading zone. And you know, if you're going with the bias of the day, usually your major low and minor low will be in the same direction or the same area. So in this case here, your major low and your minor low is at the same area because that's your daily bias. That's another way for you to identify your bias of the day. So any buys above this resistance, right? You need to be very, very cautious and you need to go with half the risk because that is your minor high. But if you're taking a buy above the major high, now this will be a 1% trade. The reason is because your hour 4 is flipping bullish. If your hour 4 is flipping bullish, there's a very high chance for the daily to flip bullish as well. So at that point, your daily is going to be bullish, your hour 4 is going to be bullish, your 30 is also going to be bullish. Get what I mean? So at that point, you can go with your full 1% because all the time frames are bullish. Everything is in sync with the higher time frame. Whereby if you take a buy above this, your hour 4 candle is still bearish, your daily candle is still bearish. The only structure which is bullish is the 30 and the 15, nothing else. And the hourly as well sometimes. So the probability goes down. Make sense? Right. So now what about a candle that is printing higher highs and higher lows within this structure? Right. Where was your trade? What time was your execution? 1 o'clock. 1 o'clock on Tuesday. Tuesday, 1 o'clock. On eight. Let me identify the candle first. Yep. Ah, makes sense. Right. Your major support is this. This was your major support. Yeah. Okay, so if you look at this, this is your entry candle here. This is where you executed. This is where you took a buy, right? So if you notice, our support did, yep, our support did not get tapped or even rejected. This is our hour 4 key level here. And that was the problem that you faced. This is your hour 4 key level. And the moment you took a buy, price was respecting a minor support, not a major support. So that's the difference. If you took a buy over here, it wouldn't have worked out. But if you took a buy at the major support, then it would have worked out. And you see the difference between this entry that you took and this entry that might have worked out, right? The reason why the second entry would have worked out is because the Hour 4 candle and also the hourly candle tap the major low, on this bottom wick, and then we flip back to the upside. So that would have been a better buy on this impulse shift. And I did execute on the hourly. I executed on the hourly type C impulse. Me and Isa, both of us took this trade after a rejection on a previous support, major support. We got in at 2 o'clock. 2 o'clock after the rejection of the major low. So the most important thing here is that you need to pay attention on where price is rejecting. If it's not rejecting a major support on the hour 4 or a major high on the hour 4, which means the top wicks or the bottom wicks, there won't be a type B entry unless you reject a proper, substantial, strong enough structure. Clear, bro? So you need to pay very, very close attention to your minor highs and minor lows. That's the most important thing. So look at this. We discussed about this earlier. Yeah, 70 to 80% of the time, that's how it is. But then, sometimes if you come in at 2 o'clock, then that's a new Hour 4 candle. That's a problem now, right? So the difference between the current Hour 4 and the new Hour 4 is that this is your major high and your major low. But the problem with that is you need to look at your session that you're trading it as well. So 2 o'clock, we have a new Hour 4 candle. So if the new Hour 4 candle breaks the high, you're going to be back to bullish, right? But if it respects and then flips back to the downside, you're going to be back to bearish. So it's very, very, very significant. It's basically the same thing, but you need to understand what the Hour 4 is going to do. That is why we call it the behavior time frame. Understand the behavior of the Hour 4 candle. So if your new Hour 4 candle push down first, there's a very high chance first you go back to the upside. But if your new Hour 4 candle push up first, there's a very high chance for us to go back to the downside, right? Why? It's because your Hour 4 candle is creating a top wick or a bottom wick, and then it will go in the opposite direction. So your new Hour 4 breaking this high without a bottom wick doesn't mean it's bullish. It just means that we are creating a top wick, basically a new lower low, lower high, and then it will go back to the downside. Clear, bro? Right, so pay very close attention to what your Hour 4 is doing and how did it react as well. So looking at the current Hour 4 candle, you can clearly see that at this point we're rejecting a support. So if you are rejecting a support, a daily support, sorry, a Hour 4 support on the previous low there. So look at where we are pushing out of it. We are rejecting out of the previous Hour 4 bottom wick. Yeah, so it means that we are rejecting from a very, very strong key area. So now if the next Hour 4 push down first, I'm not going to take the sell because there's a higher possibility for us to break the previous Hour 4 and then go back to the upside because we are rejecting out of a major low. But then again, we still need confirmation, which is, let's go back to the 15, and now your confirmation is going to be candle closing above. Make sense? See how we correlated the 15 with the hourly and also the Hour 4, right? And as I mentioned earlier, this is also your major high. So I will be okay taking a buy above that. But above this, half the risk, no matter what. And yeah, I mean, this is a perfect example as well. Look at this. Your first candle closed super strong bullish, a lot of liquidity in the market, right? A lot. Next candle closed bearish. Third candle went down, created a small bottom wick, and then broke the high. So looking at this here, I wouldn't take the buy. One is because your top wick is your stop loss is way too big, right? It's 89 pips. It's too much. I'm not going to take the trade. And number two is I don't like how we rejected the support. It's a very, very small bottom wick and also a very long top wick, which means that there's a lot of rejection to the upside, right? So if this current candle rejects the area and then flips back, breaking its own low, there's a higher possibility for us to go back to the downside. And remember, your plan A is still sells. So that is where we're going to go in with impulse type B sell. If this candle flips bearish and breaks its own low. So notice, no matter what, I'm still focusing on the sells unless we break a major high. Yeah, right, beautiful. Any further questions, bro? Right. So I mean, it's just a matter of you implementing Zagil, understand when to execute and when not to execute. So now I want to talk about type D entries, which is yeah, more or less impulse entries as well. Right. Type D is very simple. You just need a major support, major resistance to be formed. Right. So as an example, we have a major high, major low over here. I need to see price holding a structure. Same thing, major high as well, right? I want to see three candles, a minimum of three candles holding the structure here. And then the timing plays a very big part as well for this entry. It will only be executed during high volume, which is London Open, or sometimes at 2 o'clock and 2:30 onwards, because you know that 2 o'clock, it's a new Hour 4 candle. So that's when a lot of volume comes in as well. So within a major high or a major low, I want to see price printing specifically in this manner, right? It needs to be three candles side by side. And then the fourth candle, it needs to create a bottom wick and break the high. And that will be an impulse entry. And this is the rare scenario where we will be executing a buy without a closure above resistance. But understanding that price consolidated first and then we broke the high. Clear, bro? Right? And this rule applies for the cells as well, exactly the same. The most important thing is major highs and major lows. This will only work out during or within that structures. If it's in the middle of nowhere, then it rarely works out. Yes, correct. Respect and then breakout. And during volume breakouts, meaning 3 o'clock, 3:30, 4 o'clock, 4:30, and so on. Peak hours, peak hours. Like now, this price is just pushing up. I'm not bothered. I'm not gonna jump into the buys, even if it looks like a type C. I'm not gonna take the buy because we understand that there is a possibility for price to form a new resistance over there, and then potentially go back to the downside again. Because your daily is bearish, all four is bearish, everything is super strong bearish. Clear, bro? Right, beautiful. Yeah, that's it for type A, B, C, and D. We went through risk management. We went through identifying your no trading zones and when to execute trades as well, right? Only at major highs and major lows. So now, lastly, finally, I want to talk about continuation trades, which is minor highs and minor lows entries. So there's two very big thing or important things that you need to keep an eye on, right? Number one will be the direction of the market, and number two will be the range that you have. So as an example, if your daily is bearish, your whole four is bearish, everything is super strong bearish, and price is pushing out of a, let me draw the structure first. Right, price is pushing out of a major high, and it created a lower low and a lower high structure, and it's trying to go back to the downside. Let me remove this. Let me draw my support. So if within these structures, the box represents no trading zones. Box represents no trading zones. I think I want to do it better. No trading zone. We broke, then we came back to the zone. Right, so now the top of the line, the resistance is your major high, and the bottom part is your major low. And your daily bias is sells, our 4 bias is also sell. So with this type of structures, we call it a continuation structure, where we are going with the direction of the higher time frame in conjunction with the 30-minute printing lower lows and lower highs as well. Clear so far? Right. So what do we do in this scenario is, yes, no doubt that this is a minor low and a minor high formation. But the thing is that now you're going with the higher time frame bias and you have confirmation for price to continue back to the downside. the first thing that you have to ask yourself is, do you have a clean range back to the downside? If yes, you have a clean range, 100% you can go in for the trade straight away. Doesn't matter if it's a type A or type C impulse or whatever it is, you can go in for the trade. So by clean range, I mean that the candle needs to print in a elongated manner, right? No support, no nothing, right? Correct. Very, very strong push to the upside. So within this structure, now after printing a new lower low, lower high formation, and also a rejection on the previous support, which means price came back to the previous low that we took out, and then it's rejecting that area. Now you can try and say that, okay, price might go back to the downside. And if you have volume, 100% you can go in for a sell because you have a clean range and so on. So now let's talk about taking a buy within this type of structure. So this is going with the direction and also going with market structure as well. Lower lows, lower highs. It's perfect. It's a perfect sell. It doesn't matter if it's breaking a minor high or a minor low. It doesn't really matter. As long as you're going with the higher time frame direction. So what about the buys? So in order for you to take a buy, it's very, very simple. Step number one, look at your range. Do you have a clean range back to the upside? And remember, now you're taking a buy in the middle of nowhere, right? You have a higher high and a higher low structure. Everything is still bearish. Everything is still super, super strong bearish. But you see a potential entry for a buy, which is a new no trading zone and then a break above. A perfect type A setup. So what you have to do is you need to check your range. Number one, I want to see is clean candles, exactly the same thing. But this clean candle has to be within the range of the no trading zone. It can either be a strong bearish candle like this, or even 3 or 4 bearish candle which went down like a ladder. That's the only thing that I want to see. If there's messy candles or too many top wicks, too many bottom wicks, I'm not going to take a trade. So as an example, something like, yeah, this one. Just imagine that this is your no trading zone, right? No, that's not ideal. Let me look for a clean. Yeah, look at this. So no trading zone, and we have too many top wicks over there, right? On your left, too many top wicks, and the size of the candles are, some are small, some are big. It's not consistent. So within this type of structure, I'm not going to take the trade. I will just stay out, unless if I have a candle which is elongated, something like this, long as candles, then I'll be happy with taking a sell. So look at the difference, the way that the price has formed, right? Look at this. Clean candle, one clean push. Messy candle, this, yeah, no entry at all. This was an impulse, right? And yeah, another one is here. Clean range to the downside, perfect type A sell. Messy range to the downside, messy entry. See the difference, eh? So that's what you need to keep an eye on. So that rule also applies to taking a buy within a downtrend as well. Look to your left. If you don't have a clean range, there's no trade. If you have a clean range, wait for confirmation. So ideally, when you are going against the trend, I wouldn't take impulse entries. I'm not okay with taking an impulse entries. I would like to see confirmation first, and then we go in for a trade. Either a type C confirmed buy or even a type A confirmed buy. So, yep, an impulse buy. Correct. So within this scenario here, if you don't have volume and you don't have a proper structure or closure or anything, the best thing that you can do is just wait, right? Extend your no trading zone, put it back to the major high, and then just wait there, see what happens. So at this point, if your price is breaking a minor low, you can take the sell. Reason is because buyers is still bearish. But if your price is breaking a minor high, I'm not going to take the buy. I'm going to wait for the major high to be taken up. Then we go in for a buy in the scenario of us not having a clean range. Here, bro. Oh, good. All right, beautiful. And that exact same rule applied over here as well, right? Yes, no doubt that we did have a clean range over here on your left. But look at how the candles are closing. It's not clean, right? And also it ate up half of the range by the single green candle. So I'm not going to take the buy at this point. It's very messy. So what I'm going to do is very simple. Go back to the hour 4, mark your major high, go back to your 30-15. You have your no trading zone, right? That's your major high. That is only when you'll be taking a buy. Besides that, anything below this structure, it will be bearish. It will be sells. No matter what. Price can come all the way here and then still reject this area. It might still be bearish. Clear, bro? All right. So sells. Let's talk about sells now because remember your plan A is sells, your bias is sells. So now we need to discuss about impulse entries post analysis. Meaning you have your plan A, B, C, and D all done, and if neither works out, what are you gonna do? You need to be able to work around the candle, which is going with impulse entries, and this will only work out during high volume sessions. So as we understand, price is bearish, lower lows and lower highs. So the moment you see price printing minor highs and minor lows, or even printing resistance, and it's breaking a previous support, you can be going in for an impulsive sell. But you have to correlate the entry with the 30 and also the hourly time frame. So let's start from the 15, right? Start from the 15. So as I mentioned earlier, anything below this, we are still bearish. And now we can clearly see that price is trying to print a new resistance. So in a downtrend, we will be printing lower lows, lower highs, lower lows, lower highs. And every time we print the lower high, we are basically printing a new resistance. Two candles side by side. That's our lesson 1, chapter 1, right? Downtrend. So if you keep that basics in mind, currently we are printing a resistance. I'm not bothered about the previous candles. I'm not bothered about what is happening, within this structure, this support or whatever it is. I'm not bothered. I'm just focused on the higher time frame buyers and trying to correlate the lower time frame with the higher time frame. That's all I'm doing. So looking at this here, you can clearly see that price is going to close the next 12 minutes and we're going to close super, super strong bearish. And now you have to ask yourself this question. Is your current resistance higher or lower than the previous resistance, right? For this structure, our current resistance is lower than the previous resistance, which means we are printing lower lows and lower highs. So keeping that in mind, impulse entries, the moment your current candle breaks below the previous support, this is a valid sell. Still can go in for a sell. Doesn't matter if your previous structure is messy or not. You're just focused on higher time frame confirmation, right? Higher time frame confluence. Because we understand that the hour 4 still needs to go down, the hourly still needs to go down, and the 30 still needs to go down as well. And that is where we get into impulse entries working around the candles. So this here is a valid impulse sell. If you didn't understand structure, you didn't understand what is happening, you wouldn't have gone into this trade. You would have waited for a candle to close, and then by the time you do that, you're gonna break this low overextended candle. You have to wait for another 1 hour, 2 hour, and so on. But if you understand structure, understand what price is doing, yeah, you can jump into impulse entries. Like for me, 100%, I would have gone into this trade. Understanding that price printed lower lows and lower highs below a major low. That is the keyword, that major low. Now it's a valid entry for me. Yeah, because you're working around the candle. So the idea is, in a downtrend, if you break a support, you can go in for a sell. A support, it represents a previous candle bottom wick or even two candles side by side structure. And as long as you print lower lows and lower highs and you're breaking a support or a previous candle, you can go in for a sell. Right? So the idea of this is, I did mention this earlier. Your hourly just needs to go up, create a top wick, and then come back to the downside, right? And that is exactly what happened. Look at that. This was our support, and that is where price tapped as well. Ngam ngam. Exactly that. You can rewatch the stream later if you have a a better understanding. So that is an impulsive sell. So with this type of entries, the SOP is still the same: 1 to 1, close 90%, and then balance, just let it go, 1 to 3, and usually your 1 to 3 will be at the major support. Most of the time, it will be somewhere over that area. That's your major support. Clear, bro. Right, beautiful. So yeah, that's about it for risk management, entry, no trading zones, and also impulse entry identification as well. So this here takes a long time to master the impulse, because you need to understand your how for properly first. You need to understand your hourly properly first. Understand pullbacks, push phase, all these things. Only then you will be able to master these entries. This is more, I would say, more advanced now. But but the basics are still the same. It's still lower low, lower high, lower low. That's it. It's just rejecting support, rejecting resistance, and all that. But yeah, if you don't want to go in with the impulse entries, you have another option, which is the best option, which is to just wait. Hey, just wait for price to break your support, break your resistance. It doesn't break, there's no trade. Don't be jumping into minor high, minor lows entries and trying to get into every single trade. That's the worst thing that you can do. The three key factors to really focus on: number one, your bias; number two, the range that you have; and number three, the area that you are rejecting or breaking out of, the major highs and major lows. If you focus on these three main key factors, you will be good. Right? You will always go with the bias, the higher time frame bias. And I'm very sure a lot of people would have jumped into the bias there just to get stopped up, hit stop loss. They think that, oh, now price is breaking a high, it might be a strong bullish coming in, and all that nonsense, because they don't know the higher time frame confluence. You need to be able to correlate the higher time frame with the lower time frame. If you don't do that, and you just focus on, yeah, it looks 100% like a type A, but then you see the trade didn't work out, and we managed to understand that by just focusing on the higher time frame. What is, I mean, if you executed on the breakout of this, your stop loss is around 82 pips. You only got around 34.5 pips, around 0.42, not even one. Yeah, I mean, I wouldn't execute at all, because the way that the candle closed, elongated, very long top wick, very long bottom wick. Correct. So now look at the current candle. We did discuss this earlier as well. I need to see a support formation and then a candle closing back above. So now we have two confirmations first to take a buy. Yep. Yeah, rejecting, breaking the low, and then rejecting, right? And that is exactly what is happening now. So now I will be comfortable to take a buy, but I need a candle to close first. Next candle, create a bottom wick, break the high. That's your type C buy. Simple as that. And now you have a better range because you have a clean top wick to the left, and you might have a small bottom wick as well. It needs to tap the previous resistance, which is the top wick here. Right? It tops the top wick and then flips back bullish. It doesn't matter if it breaks. We will only execute the moment it flips bullish. If it doesn't flip, there's no trade. Right? So this is what I'm looking for if I want to take the buy. But either way, I'm still going with half the risk because it's still against my bias. And yeah, the things that I explained earlier is basically playing out now, right? Everything 100% exactly what we wanted. So now it's just a matter of us waiting for the candle to close and then executing. So let's see what happens. We got another 5 more minutes to go for the hour 4 candle to open. So let's go back to the hourly hour 4 time frame. So we understand that the previous hour 4 is going to close bearish. Sorry, the current hour 4 is going to close bearish. And for the next 4 to go down, we need to go up first, right? So now we need to talk about sessions. So we are currently sitting at pre-London session. So if pre-London is bullish, London Open is going to be bearish. That means for pre-London, we're going to be looking for a buy because your Hour 4 candle is going to create a top wick. And then London Open, we're going to be looking for sells because your Hour 4 candle has created the top wick and now it's going to go back to the downside. Make sense? So yeah, let's focus on that. Buys are valid for now, right? Because your Hour 4 needs to go up first and then come back to the downside. So this is the key level that we talked about earlier. So I'm expecting Hour 4 to the Hour 4 candle to come over here, play around a bit dekat sini, and then go back to the downside. So pre-London buy, London Open sells. Simple as that. That's our plan. We'll see what happens. If it doesn't happen, that's it. Call it a day. No trick. 4 minutes to go. 4 more minutes. And I need the candle to close bearish. If it doesn't close bearish, I won't be executing. Quite risky. Later, I suggest you to just rewatch the whole stream, lah, just to yeah, correct, correct. So understand the whole thing first properly, and then get back to trading. Because at this moment, I think your mindset is every setup is an entry subconsciously. That's what you are looking at, right? You see a good type B, you see a good type C, straight away you go in. That's the problem. You're not able to. Yeah, yeah. So and this rule it applies to every type of formation from A to D. Not every setup is a valid entry, right? You need to be able to correlate the setup with the structure and also the formation of the whole price action. Yeah, correct, correct. Yep. So how do you counter that problem is by going with the bias. If you go with the bias, you're not going to be able to. You don't need to manage your risk as well because you're going to take quality setups which will work out 70 or 80% of the time because you're going with a bias, right? Higher probability entries. So from now onwards, I want you to only execute higher probability setups from what we learned today. No? Yeah, seven. So make it count, make it count. 7 days. Mm-hmm. Yep. Yep. Yeah. I mean, this whole month has been a trial month, so it's fine. We learned a lot this month, especially for you to execute and know when to not take a trade. You learn a lot actually. I mean, it will take a long time. It will take a long time, but just be consistent with it. So 1 more minute to go. I really wanted to close bearish, but we'll see. Oh man, 1 minute to go. By the way, I'm not gonna execute because this is not my session. I will only take a trade at 2:45. So this is just a demo trade. Yeah. Yeah, Kelvin, if you want, you can execute, Kelvin. Have not taken a trade yet. Ah, nice. There we go. 40 seconds to go. Let's see. Watching the 30. Watching the hourly. Right, hourly is gonna close bullish. So in order for us to go up, we need a bottom wick first. Hour 4 is gonna close bearish as we understand we need to go up first and then come back down. 30, 15, yeah, yeah, all looks good. Everything looks good. 20 seconds. This will be the deciding factor candle. I want it to close bearish. If you close bullish, no trade. 18 seconds. But sometimes with a lot of volume, Your candle closed doji, you can still go in for the trade. I think last week Thursday we took a sell this way, doji candle entry. 3 o'clock, right? Candle doesn't have a bearish closure, but we did close strong. Sorry, we did close doji, meaning we left behind a small body candle, and the current candle exactly tapped the area that I want, right? The previous resistance, ngam ngam. And where did we push first? We pushed down first, correct? So everything is in play. The only downside is the previous candle is bullish. That's the only downside. So we got another 30 seconds. Let's see what happens. 20 seconds to go. Yeah, that's the buy. Yeah, that's your buy then. Yeah, can even go in now because no, I'm not gonna check on my live. It's just a demo account. I mean, it's not an ideal entry for this setup because it's not on our session. It's the previous candle didn't close properly as we wanted, but it's just an example, right? That it did go by our rule, but the only downside was the previous candle. It did go down first, create a bottom wick first, broke the previous candle high, and then we got in. That's the trick. Yeah. Yeah, that is our ideal setup at 245 later. But essentially, this is your plan B buy, which is supposed to work out. Your plan B buy. Going with the idea of the Howl 4, look at that. Howl 4 is bullish first. As we mentioned earlier, the Howl 4 needs to go up first to create the top wick and then come back down. Hourly, Hourly did the exact same thing, went down first and then push up. 30-minute, exactly the same thing as well. Just the idea. Yeah, just the idea. Wait, let's see. I mean, at this point, I would have been out of the trade already. Very risky. But Oliver, one thing to keep in mind, it's the best entry would be if you had a bearish closure. Very, very important. If you're going with the against the trend, but if you're going with the trend, you don't really need a bearish or bullish closure. You can just, as long as you have a small body candle closure, you can just go in for the buy or the sell. Doesn't really matter. So against trend entries are always very, very, very risky. And you see now the buys did not really work out as we wanted. And let's see if the sells work out. So now for the sells, we're gonna work around the candle because 2 o'clock we have volume, right? We have volume. I'm gonna wait for this 15 to close bearish, and then the next 15 create a top wick and break this low. We're gonna go in for an impulsive sell, and I'm gonna execute on my live account. That is what I'm looking for a proper structure, a proper resistance to form. Let's see, 11 minutes to go. 1 moment. Yeah, let me do a quick recap. Number one is we are going to be expecting price to come over here, form a new no trading zone, and then go back to the downside. That is for a proper sell. As an impulse entry, as long as we have formed a new resistance, and then we break the low, we can go in for an impulse sell. And number three is gonna be the buys, but at this point, I don't see any buys anymore. The only buys will be with this resistance. That's the three scenarios that we're looking at. The first one is already playing out, so that is out of the box already. So every day when you come to the markets, you have an option. to go with the buyers or go against the buyers. If you go with the buyers, you're gonna probably get a win. If you go against the buyers, you're gonna probably lose the trade. So just stick to your buyers. That's the best thing you can do. Nine more minutes to go. I like how we are rejecting the area. That means the whole 4 has created proper topic. Yeah, everything is looks good. The only downside is we did not tap the proper support yet. I want to see the hover tapping this before it's going down. That would be better. But let's see. Do you have an area to see? So far, any questions, anyone? Any confusions? Anything? Yeah, Oliver, all good, Oliver? Right, beautiful. Beautiful. 8 more minutes to go. 8 more minutes. And this is our resistance here, so I would like to see the body closing below. Close below, that would be a better setup. Or even a doji. Oh man. Yeah, I want to see a 15 closure first. What's his name? Jay took the sell. Jay, you got the full trade. Yeah, very nice entry, man. Perfect type B. Going with the buyers as well. 300 pips. And that is exactly, yeah, that is exactly what we are looking for now as well. On the 15. Oliver, now we are playing with the minor lows. This is our minor high and minor low. We are playing with it. Six minutes to go. Yeah, I think we just go ahead with London Open straight away. If you want to have your lunch first, you can just leave and then makan join balik. Five more minutes. 5 more minutes. Man, this looks good. See, the bearish volume is still there, the bearish momentum. Sellers are still in the market. This is why we don't jump into, you know, impulse, spice, or something like that. So that's the three key levels that we need to focus on. The highest one is our major high. Second line is your minor high. Third is minor low, and the last one is major low. Key levels, very very important. Just put a flag there. Flag represents major. 4 minutes to go. 4 more minutes. Hourly created a top wick and then it flipped bearish. So however did the same thing. 30-minute did the same thing. 15 is also doing the same. Everything is in sync for a sell at this point. 4 minutes to go. But I don't want to see the candle closing bearish like this. Close bearish super strong. The probability for us to go back to the downside goes down. So at that point, we need a type C sell again. Need to wait. Let's see, let's see. Type B impulse might work out as well. 3 minutes. 3 more minutes. Type B impulse, yes. Yeah, to the downside. Ooh, man, tonight at the rosary prayer. Yeah, the BEC, man. Yeah, Wednesday, yeah. Forgot about that. They started back the rosary I think last week. Yeah. 8 o'clock, man. Like, my place is 8 o'clock, but what time does your BEC do the rosary? 8 a.m. 2 minutes to go. 2 more minutes. And yeah, we can go with the full 1% risk because going with the higher time frame bias. And if you notice, my analysis took me close to 20 minutes. In-depth analysis, understanding what every single candle is doing. Not just looking at the color of the candle and then going to the hour 4 and then the 30, right? You need to understand how it's behaving with every single the previous structure and previous candles as well. Oh man, look at that. Look at that. Come on, brother, give me a closure. 2 more minutes. Yeah, that's why, because we just broke the hour for support as well. It tends to do that sometimes. Just melt down straight away. But 30 looks convincing for a type B sell later if the current 15 doesn't work out. You can decide by side. That candle break the low. Yeah, possibly. Possibly. Still within the range, but then we're going with the bias. So, yeah. Clean candle on the left, clean bottom. Overall, we have about 112 pips. Even if you get half of it, it's more than enough. 1 more minute. 1 more minute. I need to see a proper topic before going in. Let it be for 1 minute first. Right, there we go. Last minute. 15 candle is gonna close. So now compulsory, we need to wait for 1 minute. So 2:16 is when we start looking for execution. Let the candle play out and notice or keep a very close eye on how the candle reacts, right? See if it's pushing up first or down first. Finish 2 seconds and we are rejecting this. Not good. 10 seconds. Yeah, no trade. No trade. Oh. So your impulse ideas might work out, but no, understand that this is a riskier setup, right? We don't have a bottom wick. We pushed up first, which means that there is a higher possibility. The moment we break our own low, there's a chance for us to just melt down, fill in the wick on the left. So that's the idea that I'm gonna go with. So let's see. 20 seconds. Wick fill is about, yeah, plus minus 1.5. The only reason why I'm okay with taking the sell is because we don't have a bottom wick. It means that we need to go up to create a top wick and then melt back to the downside. That's the whole idea. Right? Oliver, this is us working around the candle with volume that we have. See what it does first. Rejection on the previous support. Beautiful. Stop loss is gonna be about 46. Still okay lah. Still round it off to 50. But if the candle breaks and closes above this resistance, then I'm not okay with taking the trade, the sell. We close above. But if we break through and then flip back bearish, still valid. Still valid. As long as we are below this resistance, we are still bearish. No matter what, we can still take a sell. 11 more minutes to go for a new 30-minute. Jay is asking, are we going to sushi today? We did Friday. Right? Yeah. Mm, mm. Come on, man. 10 more minutes. Ooh, broke through. Once. As long as it doesn't close above. If you close above, you need to go to back to your plan B now. Again, looking for a buy back to the upside. But now with volume, 230 volume. Attached. Only downside is we don't have a bottom wick on current 30 problem. So the next 30 might just melt down straight away. 9 more minutes. So with this type of entries, because your stop loss is huge, it's 72 pips. And if you still want to go with the impulse, just bring your stop loss down to maybe half of it. It's around 35, 36, somewhere there. Eight more minutes. Right. Be ready, guys. Be ready. Be ready. Okay. All right. Ciao, man. Take care. Yeah. It's an impulsive idea. That's it. Yeah. Bye. 7 minutes to go. See. For the candidate flip, bro. For the candidate flip. Because we don't have a bottom, we're gonna go in with an impulse entry. Yeah, for the sell. The moment it breaks below its own low at 4474129, then that's your sell. Expecting it to continue back to the downside. Not in yet, still waiting. Right. But this is a very, very risky setup. This will only work out if there's a lot of volume in the market, right? But an ideal entry would always be below this closure, below the support. Get it close below that. Oh man, look at that. Beautiful trick. Beautiful. You got it? Beautiful. Go break even, close 90%. That's it. Congrats. Ah, shit, you didn't take it. Okay, okay. But yeah, see, trade worked out. Beautiful. I just secured. Yeah. Ngam ngam 1 to 1. Ngam 1 to 1. You see, we waited, we stick to our plan, and we got our trade. That's it. Secured, and my trade is done. Let me put it in the group. All you need is your 1 to 1, bro. When you're 1 to 1, you're happy. I closed 90% and then I had a runner, but the runner hit break even. That's fine. It's in the group. Trade is in the group. Can have a look. Yeah, can. So 2:45. No worries, man. 2:45. I go live for London Open. So if you're free, just join in. Any further questions, bro? Before we leave. Right. Beautiful. So you can rewatch later, and yeah, if you have any questions, just ask me straight away. All right. Take care, man. Thanks for joining. See you. See you tomorrow or later. Peace to you.